Welcome back to a brand new video here on the Not Just a Trade channel. In today's video, we are going to be covering how to understand all forms of continuation structure. I'm going to take you through my process on reading direction and then how we can trade that direction with continuation structures so that we can get consistent opportunities for day trading entries. This is a recent clip from one of our webinars that we do every Sunday with our private circle members. So let's get straight into today's video.
I always look for that range and initiation on the monthly, weekly, daily. When we pull back into this range here in the future, I want to see a slowdown, which is a fractal high. And then I'm looking for any bearish continuation here to the downside. So our fractal high on the higher time frame is high and a higher high, which is that doji candle run above the high of the doji. And then now any continuation structure here to the downside. Just to recap on continuation structure, right? So after we've seen fractal highs at our higher time frame sell ranges, price is either going to create one of three continuation structures. We're going to move in a trend. How do we identify a trend? If you've watched the course, it is A to B, pull back to 50% and continuations. A to B's, pull back to 50% and continuations, right? A nice bearish trending market. This is the cleanest market structure that we could get. The second market structure is initiations, right? That's when we move very aggressively in one direction here. So we'll get initiation, new ranges, initiation, new ranges, and initiation, and it creates an A to B like here. The thing to look out for in the A to B here is that price doesn't pull back to the 50% before seeing continuation. That is the clearest identification that we are in an initiation market structure, and one of the most important things. 1 second, guys. How do I mute people again? Oh, here we go. Lovely. Yeah, so that's like the clearest identification of the initiation structure, right? We get initiations, pullbacks that don't pull back into the 50% area before we see continuations, the downside. So this is structure number one. This is structure number two. And structure number three, all it is a trend with price running a high. So we might see an A to B, pullback, continuation. Price then runs above this previous high. We ask ourselves, how do we break, right? That's really important. How do we break above the high? Strong rejection of higher prices, and then we're playing continuations here to the downside. Then we might move into a pullback continuation, you know? And we could even just continue this structure, right? Where we get new highs, run above highs. How do we break? No extension and continue. This, most traders will get caught out of because they're looking at this as their break of structure here to the upside. Now, because we've already seen our fractal on the higher time frame, and this is our 15-minute continuation structures that we're looking for, 1, 2, or 3 here, we know that these run above highs actually give us great opportunities to play sell continuations here back to the downside, right? Any sell continuations to the downside. So once you understand this process, this is our monthly, weekly, and daily range and initiation. We've pulled back into here and we've created a fractal which shows us a slowdown within price. And now when we get to the 15-minute chart, we are looking for 1, 2, or 3, right? Continuation structures. These all represent continuation structure within the market. That's price telling us that it wants to move to the downside when we're at a higher time frame sell range. Now, if price is moving to the upside, for example, if this is our fractal that we've seen here, and we've seen an initiation down, right? And price is then reversed, meaning that we get one of these continuation structures in the opposite direction. So like, for example, let's invert this. We get some kind of continuation structure like this within the market. Then what we need to see is price running above a high, any of these highs, and seeing a strong rejection, right? Then we can start to play that new direction because price is going to move when we're moving to the downside. These are the legs that we want to look for. These will be our continuation legs. Now, when price does start to pull back here to the upside, this is where we want to read current price action. And we want to apply on our current price action understanding, our processes, right? So this is why I'm always looking at A to B movements in the opposite direction. If we don't pull back to 50%, that's where I use rules like when we're in a bullish initiation or a bullish trend, I have to see a run of a high or run of a low, no extension, strong rejection. That's so that we can try and determine when the reaction is going to happen for that next leg down for the continuation down. So it's really important. These only represent 1, 2, and 3 only represent a down leg, you know, in a move. When we do start to pull back here, that's where we want to read current price, runs above highs, no extensions, and then we could be in that next continuation phase leg, right? Which would essentially just be these legs in a trend here to the downside, or these legs in an initiation here to the downside as well. Does that make sense to everyone? Because this is a higher time frame reaction here, it's not just going to be straight trending markets or 1, 2, 3 continuation structures all the time. We're going to see pullbacks. Now, when we do start to see those pullbacks and we start to see those trends in the opposite direction, we know that these pullbacks are just for the greater move that's going to be to the downside. So it's not just about looking to the left every time and trying to trade the top of these moves. We actually need to think about how is price continuing through these highs, right? If we extend through, that shows that price wants to trend. So we look for those pullbacks and continuations, right? And then we assess at this new high. This is how we're able to understand the turning point for that next big higher time frame move that happens there within the market. Is that making sense? Yeah, exactly. Yeah, exactly. Exactly based on location as well, right? This is going to be very important. So yeah, so like these are all the structures to be understood on when price does pull back. And when I say pullback, right, what I really want to understand and determine from these lows that we see down here is a slowdown. Now, when I see a slowdown, it is price running below a low and not extending, right? Having a strong rejection. Then we start to see moves in the opposite direction. So these represent slowdowns, right? Any of the marks that we have on the charts here, any of these swing points here, or even, up into these highs that we have here on the charts, these for me represent areas that I want to see a slowdown on the charts. Now, a slowdown is literally just this formation. Price running below a low, strong rejection, move in the opposite direction, or running above a high, strong rejection, move in the opposite direction. These represent a slowdown. So if we're seeing any of these slowdowns here from these blue points here, this is going to tell us that price wants to move in the opposite direction. So this is where I apply on my price action principles of if price is trending or initiating, then I have to see a run of a high, no extension, strong rejection, and then play the opposite direction. Of course, this comes from our previous sideways range. And all of this, I just want to see it in my overall direction here to the downside, because the monthly, weekly, and daily is setting the direction based on the fractal. The 15-minute is showing us continuations, and the blue dot areas are the slowdowns that could represent the next biggest leg that comes here within the market, right? So all of this is just combined together to give us an edge on the market. And all of this is just price action, right? This is before we get into entries. This is just understanding a process of how to read price action consistently, right? And this is what I apply to the markets every single time to read price action. So yes, so that is pretty much the process that I'm always using, or what I'm always looking for on the charts, right? Every single time it's exactly the same process, looking for those continuations. If we look at it on a higher time frame as well, right, when we're getting into these higher time frame mitigations, these areas where we see swing points happening within the market, or even when we run above highs, these are the areas that if you want to train your eyes to see reversal points within the market, go back and look at every single time price has created a high or created a low within the market. When me and Chucks was learning how to trade in terms of, 4 or 5 years ago, trading this process, this is exactly what we done. We went and looked at every single time price created a turning point within the market, and we started to understand how we can trade that direction within the market. So if you really want to train your eyes on how to read turning points within the market, just look at every single high and low and look at how it's created. You can even just look within the candles when you're looking at 2 candles, and you can see, well, when price creates a high of a candle, look at the next candle that creates a higher high, and then we move in the opposite direction. What is that? It's a fractal high created on the higher time frame and the lower time frame. A higher time frame will be just 2 candles. A lower time frame, you'll see the pullback, run above the high, no extension, and move in the opposite direction. So a time in our career I'll never forget. Yeah, those times were good. That was a lot of sitting on the charts all day, just understanding. That's what that was. That's where all this was created. Even back then, I would say, like, understanding what we was looking at and what we was looking for was like still a tiny piece of the puzzle, but that's created our understanding today. So these things that we do was very important. But yeah, like even looking at the individual candles, just look at the highs of the individual candles. So if you know that we've had this reaction here from the higher time frame and we're looking for bearish continuation structure because that follows our process, you want to be understanding how price is running above these highs here in the current candles, because this is going to give us an understanding of turning points within the market. Fractals are just turning points. That's literally what they are. They're turning points within the market. So when we see price running above highs and running below lows, or running above daily highs or below daily lows, these could represent potential turning points within the market when we think about how do we break above these highs or below the lows as well. So very important.